Ever wonder how a company like Equifax, primarily known for credit reports, actually makes its money? It's a question many people ask, especially when they're thinking about the complexities of the credit reporting system. We all know Equifax as one of the big three credit bureaus, alongside Experian and TransUnion. We've heard about them, often in the context of checking our credit scores, or, unfortunately, perhaps even in relation to data breaches. But the actual business model, how they generate revenue, often remains a mystery. In this video, we're going to pull back the curtain and explore exactly how Equifax makes money. Now, before we dive into the specifics, it's important to understand the role Equifax plays in the financial ecosystem. They're essentially data aggregators. They collect and store vast amounts of information about consumers, including their payment history, loans, credit card accounts, and even public records like bankruptcies. This data is then used to create credit reports, which are used by lenders, landlords, employers, and others to assess the creditworthiness of individuals. So, while they don't directly lend money themselves, they're a crucial cog in the credit system. So, how does this data collection and reporting translate into revenue? Let's break it down. Equifax's revenue streams can be broadly categorized into several key areas. First and foremost, they generate significant income from business-to-business services. This is arguably their biggest revenue driver. Think about it. Who needs credit reports? Lenders, of course. Banks, credit unions, mortgage companies, they all rely on credit reports to make informed decisions about who to lend money to and at what interest rates. Equifax sells these credit reports to these businesses. They don't sell individual reports to consumers in the same volume. The real money is in the bulk sales to businesses that need to check credit constantly. This is a subscription-based model for many businesses, where they pay a recurring fee to access a certain number of credit reports or to use Equifax's data and analytics tools. The more reports a business needs, the more they pay Equifax. Beyond just pulling credit reports, businesses also use Equifax for other services, like credit scoring and risk management tools. Equifax develops sophisticated algorithms and models that help businesses assess the risk associated with lending to a particular individual. These tools can predict the likelihood of a borrower defaulting on a loan, for example. These predictive analytics are incredibly valuable for businesses, and they're willing to pay a premium for them. Equifax offers these tools as a service, often integrated with their credit reporting services, further boosting their revenue. Another important revenue stream comes from marketing services. This might seem a little surprising, considering their primary business is credit reporting, but it's a significant part of their operations. Equifax uses the data they collect to segment consumers into different groups based on their demographics, financial behavior, and other factors. They then sell this anonymized and aggregated data to marketers who want to target specific consumer segments with their advertising campaigns. For example, a car company might want to target consumers who are likely to be in the market for a new car. Equifax can provide them with a list of consumers who meet that criteria without revealing any personally identifiable information, of course. While privacy concerns are always a hot topic in this area, Equifax maintains that they adhere to all applicable regulations and that the data is anonymized. Nevertheless, this aspect of their business has faced scrutiny, particularly after past data breaches. Equifax also offers identity protection services directly to consumers. This is a more recent area of focus for them, driven in part by increasing concerns about identity theft. These services typically include things like credit monitoring, fraud alerts, and assistance with restoring your identity if it's been stolen. Consumers pay a monthly or annual fee to subscribe to these services. This is a direct-to-consumer revenue stream, unlike their business-to-business services. It's also, in some ways, a response to and a capitalization on the very anxieties that data breaches, including their own past breach, have created. Now, it's crucial to acknowledge the elephant in the room, the 2017 data breach. This incident, where the personal information of millions of people was exposed, had a significant impact on Equifax's reputation. They faced intense public criticism, regulatory fines, and legal challenges. While it didn't fundamentally change their business model, it did force them to invest heavily in improving their data security and privacy practices. It also highlighted the importance of data protection in the credit reporting industry. The breach, while damaging, hasn't stopped the fundamental need for credit reporting, and thus, Equifax's services. One other area where Equifax generates revenue, although perhaps a smaller portion compared to the others, is through collection services. They provide debt collection services to businesses, helping them recover outstanding debts. This is a natural extension of their credit reporting business, as they already have access to a lot of information about consumers' financial behavior. So, to summarize, Equifax makes money primarily by selling credit reports and related services to businesses. This includes credit scoring, risk management tools, and marketing data. They also offer identity protection services directly to consumers and provide debt collection services. Their business model is heavily reliant on the vast amounts of data they collect and their ability to analyze and monetize that data. While the 2017 data breach was a major setback, they remain a key player in the credit ecosystem. Their revenue streams are diversified, allowing them to cater to a wide range of clients and needs. It's important to remember that the credit reporting industry is constantly evolving, with new technologies and regulations emerging all the time. Equifax, like its competitors, needs to adapt to these changes to remain competitive. They need to balance the need to provide valuable services to businesses with the responsibility of protecting consumer data. This is a delicate balancing act, and it's something that they're constantly working to improve. With that said, thanks for watching, and until next time.